I'm Sita Fey, Director of External Affairs.
I'm Jamie Buck, Director of Innovation.
This is Fundamental, the podcast from NYSIF, the organization at the intersection of finance, health, business, and labor in New York. Well, Jamie, it's my month as per usual. I think every month is really my month, but it is Women's History Month.
This is true.
Here in March. And we're also coming straight off of the 16th annual MWBE Symposium and the second annual Emerging Managers Week that we just had in February. So I'm really excited about our next guest. Lisa Hinds is Managing Director of Client Engagement and Sustainability at Xponance, one of the largest diverse and women-owned investment firms in the U.S. with over $24 billion under management. She's a member of the firm's Management, Investment Governance, and ESG committees and has over 30 years of experience in the financial services industry. The other thing that our guests really need to hear is Lisa's a rock star. She has been coming to our MWBE Symposium for quite a while now. This is one of our partners in this space, and I'm really excited to bring her on the podcast to introduce her to everyone else and our NYSIF listeners. Lisa, welcome.
Jamie, Sita, thank you so much for having me. This is a real pleasure.
Thanks for being here on this snowy afternoon.
It is snowing. It's March,
We're
everyone.
turning the corner, though, Lisa.
Right.
We are
Why?
turning that corner.
Why not, right?
Yes.
2 blizzards, 70 degrees.
Lisa, thanks so much for being here. And Sita, thanks for the introduction. And maybe, Lisa, you could spend a moment or two talking to us a little bit and provide an overview of your organization and Xponance and what you all do.
So again, it's an honor and a privilege to be here and to be your partner with NYSIF. So let me just tell you how grateful I am for that partnership and for this conversation. Xponance, I wish I had a sort of a clear definition, but as a multi-strategy, multi-asset, founder-led, diverse-owned, diverse-managed, employee-owned investment firm, we've got a 30-year track record managing assets, institutional assets up and down the capital structure. Our offices are in Philadelphia and in Durham, North Carolina. And again, NYSIF is one of our longest, long-term and most enduring partners. We're looking to do so much more.
You know, on this podcast, Lisa, we really are trying to make insurance accessible and a lot of what we do at NYSIF accessible. Part of being an insurance company, you know, we've been here for over 100 years, 111 years, is having an entire investment portfolio and having some assets under management. And that's where we really are engaged with this partnership and on MWBE. We're also a public purpose entity. And we are state employees. We're state government employees. There's always this misconception with insurance companies that we're trying to push back and dispel on. And there can be a lot of misconceptions about the finance industry in general. One of those misconceptions I want to address is that investment managers only focus on the wealthy. Your client base includes pension funds, endowments, foundations, and teacher retirement funds, things that many non-wealthy people depend on. Why do you think there's such a disconnect between the investment industry and the general public?
You know, and for that, I will fall on the knife for that, because as an institutional asset management firm and a professional in that, I think that I owe it to the public to do more education as to who we are, what we do, and who we've been called to be. And that is such a big part of our identity, our calling. It's not that we're just making rich people richer, right? We are guaranteeing or seeking to secure dignity and retirement, or as the public purpose insurer, as you are, we want to make sure that those claims can get paid. We want to make sure that we are managing the assets according to what you have mandated and that we are delivering on our promise. So it's not just about, you know, high net worth individuals and making the wealthy wealthier, but the teacher retirement systems, the public employees, the public purpose insurers, all of those are part of our fiduciary responsibility, separate and apart from, you know, the superior uncorrelated returns, which I hope we are delivering through this plan.
Thank you for that, Lisa. One of the things we were talking about coming out of the NYSIF MWBE Investment Symposium that we had, and we were fortunate to have you there speaking with all of us. One of the things you talked about was Xponance has a really strong ESG mandate, and that your firm was more than up to the task fulfilling that. How do the ESG standards at Xponance align with ours at NYSIF?
Absolutely. So ESG is the environmental, social, and governance principles that we abide by according to our client's mandate and mission. Clearly, there are certain institutional investors, asset owners as you are, that may be thinking about ESG in different ways. One of those ways could be that we need Xponance to exclude private prisons from a portfolio. We need you to exclude tobacco or alcohol, what we call the quote, sin stocks, making sure that the deliverable that we have for this plan and for others is meeting our clients where they are with what they've asked us to do. And we also go a step further with respect to transparency when it comes to the ESG mandates that we have, however they're interpreted, however they're defined. And that transparency report, what we call attribution in the industry, will obviously backtest or very clearly state what this exclusion has detracted from or added to with respect to portfolio performance. You give us certain benchmarks, you give us certain mandates and guidelines, and it is our privilege to manage your money as you have mandated. So you've given us very clear definitions and interpretation of how you see your values and how you see your mission. We have made the investments in people, processes, technology to ensure that the public equities mandate that we are managing for you is in line with those expectations and with the mission of not just the mandate, but of the institution. So much of what we do for our clients, of which obviously NYSIF is one, is ensuring that we are up to the task, that we are delivering, that we have the level of transparency that you need to ensure that we are managing your assets as you have defined it, and that the ESG principles are clearly defined, clearly mandated, measurable, and that we are delivering on what you have asked us to do. And now we do that with other plans as well that maybe are not as forward-thinking as NYSIF. So the exclusionary approach is one tactical way that you can express your values. And then there's a more proactive, impactful way, which we can talk about as well. Either way, we are happy to meet our clients where they are.
This is why 30 years in the industry.
Yeah, exactly. Diverse and women investment professionals seem to be making the biggest impact, Lisa, and having the most success with private equity as compared to other investment vehicles such as hedge funds or mutual funds. What is it about PE that enables diverse and women investment professionals like yourself to succeed?
Well, that's refreshing to hear. And I am glad that the impact that we are making in the industry on Wall Street, on Main Street, is happening. And that is that's a big part of Xponance's calling. In addition to, obviously, the superior uncorrelated returns in private equity, there is a clear opportunity to express your values in very proactive ways, not just in exclusionary ways, but ensuring that the private equity portfolio, the portfolio companies within private equity are creating jobs, are cleaning the air, are creating justice within the greater society, the things that we've been called to do, the things that we don't forget as minority and women-owned investment managers. So there's a clear opportunity. And again, not just with job creation, but creating technologies that are impactful and that are reaching communities, for example, that may not necessarily have the same access to. And that's a big part of who we are at Xponance, is just access and opportunity. As a matter of fact, Xponance's mission is transforming access to alpha. And when we are transforming all of that access to smaller, newer, entrepreneurial managers, whether on the private side or on the public equity side, the access is part of our responsibility.
Thank you.
It's the second annual Emerging Managers Week. And
yes.
Almost everyone that was a part of that recognizes that, we titled the week together as the second annual Emerging Managers Week. That's fantastic. Most of us have been in this space for 16 years, 17 years, 18 years, 20 years.
Absolutely.
There's relationships that go back. And the idea is that when you bring MWBE firms together and you create that access, that's a big point that we want to do. And we are having conversations with emerging managers. And we have conversations with people that, maybe we don't start with them right away, or we give them feedback and we develop. One of the things that we talked about at our symposium was what you need to know to work with NYSIF and what you can take from other firms. And it was really refreshing to hear many other individuals just talk about the process and talk about what they learned, because this is a community.
It is.
And, we are one of many partners that are available. And we are also out there making sure that people want to work with NYSIF. And part of that is creating and building the community, and also understanding what the needs are and what the challenges are. When you're, a fund 1 versus a fund 2 versus a fund 5 versus someone that has been around and has a lot of assets under management, it's very different when you're starting out. We at NYSIF are very reflective about the work that we're doing and how we're engaging along the way. And it's a partnership with the firms that we choose. And it's also a continued conversation with the firms that maybe the first round, we're not there yet. It helps us learn from, and it helps us learn and it helps the firms learn as well. And I think that's a big part of the conversation throughout the week. We're not the only manager that's going to say that. I think we're walking the walk, we're talking the talk, and we're actually learning from some of the challenges, and we're sharing that and giving a platform for others to bring forward, because otherwise, how are you going to get in the door?
Right.
And everyone started at Fund 1.
We sure did.
Everyone has a Fund 1. So when we bring people together, there are people in that room that are on Fund 1 or 2 or 3, and then some that are 30, 40, 50, 60, have so much experience to share. And bringing that diverse group of experience together is a big part of what Emerging Managers Week is all about.
You know, it's interesting that of all of the asset owners with whom we engage with throughout the course of that, sort of DEI week, and I know that has a bad name right now, and that is that's regretful. That the nature of the conversations were instructive, as you mentioned, because again, as you said, everyone starts out as a Fund 1, and everyone wants to understand the roadmap, even though it might be bumpy and curvy. Everyone wants to understand what it takes to be of institutional quality. And I think that is a big part of the conversation. And we are open and available and accessible to making sure that it's not a secret as to, what infrastructure and operations and investments require the institutional quality that NYSIF needs. One of my regrets, and I'll just, put this out there, I wouldn't say it's a regret. I didn't know it was happening, that the term DEI now has this black cloud over it as if it is some remedial program for substandard people and processes and firms and so forth. I know that's not how NYSIF looks at it. And I think that also deserves platform. You and other asset owners are widening the aperture and creating opportunity for the most qualified institutional asset management firms that may be investor entrepreneurs, or that may be just starting out, or that may not have the typical pedigree that others might. I'm hoping that NYSIF will model the work that you are doing, the work, as I say, the work of love and justice, to ensure that remedial taint is out of the vocabulary when it comes to the nature of this work.
I'm going to say, look at the numbers, take a look at the balance sheet, and that is the first answer, and there is always place for that. We have pages here in front of us. We did our homework for the podcast. But in addition to that, we already know here at NYSIF, the studies are out there. Pick who you want. You want to talk about Willis Towers Watson, McKinsey, NAIC, AAAIM. They all say the same thing.
Absolutely.
Diverse asset managers have incredible returns. What would you say to someone that might be questioning that? There was a time, and it was not that long ago, where just like with ESG, right? We saw some people pulling back from ESG. We saw some people pulling back from the concept of diversity. That's never been NYSIF. The data and the information is there. What would you say to someone that might be questioning that?
So again, kudos and thank you to NYSIF for leading the way and for modeling what we know to be not just justice within the industry, but seeking this untapped source of alpha. To your question about what is holding the rest of the world back, I think that this is an industry, and again, I'm ride or die, put it that way, in the thick of it.
Yeah.
I think that the industry has a fault line and is more comfortable with the familiar and is driven more towards the familiar, the household names, even though I'd like to believe that Xponance is becoming one of those, the household names, than they are to the alpha that we are seeking to create and are hoping to create. But the reversion back to the familiar, back to no one ever got fired for hiring IBM.
Right.
That is still a part of the thesis that I think many of us in the industry bring. But we're looking to dislodge, maybe disabuse some of the asset owners with whom we talk and with whom we negotiate and manage for, that there is even greater opportunity within sort of the broad asset class of diverse and women-owned asset managers. I think that there's an opportunity ahead of us. And even, $24 billion later and 30 years later, we think that there is so much room to grow with respect to who we are and the impact at scale that we can make and that we are hoping to model.
We can't talk about your organization without talking about Tina Byles Williams,
Absolutely.
the founder. She has an amazing backstory. She really believes in herself and takes risks to make it happen. How does her personal story of grit and determination impact the culture that you have within your organization?
Oh, absolutely. First of all, it is a privilege to work at Xponance. I like to say it took me 30 years to find this institution. But one of the things I think that sets the culture apart that Tina Byles Williams has set for the rest of us is not just a culture of excellence, not just a culture of getting it right, not just a culture of client first and diversity and mutual respect and all of those core principles that we have written on our wall, as I'm sure you do as well. But those are lived experiences, and those are the stories that we live by and tell. For example, with respect to culture, the culture that Tina Byles Williams has created is that we don't have a star system at Xponance, and that is a far cry from the hedge fund industry from which I came. And not having a star system means that we have to trust and collaborate with one another. We work together, and being the champion for our clients, the voice of our clients, is something that we don't just talk about, but it is something that we actually live by. And I know everybody says that they're client first, but we wouldn't be in the game for 30 years being founder-led were we not actually living and breathing that cultural value. We were, again, the accolades are, long and lengthy, and we're very proud of those. But being one of P&I's best places to work for the last 6 consecutive years is kind of a big deal. And a lot of that is the testimonials of my team that speak to the credible, actionable things that we do to support and show up for one another in real and intangible ways.
Building off that, Lisa, I mean, you've worked for some phenomenal firms over the course of your career, household names, as we would say, right? And you've just talked about the culture that has just been established for Xponance. How does it work so well, right? What's the difference? Some of these firms, maybe they put the same types of words on the slogans, on the principles PowerPoint page. But what's different? What's different here?
I'll just confess a little bit about my background with other firms, and I can compare and contrast because I've been around. I've spent a career before I got to Xponance trying to figure out what version of the truth I was going to tell my clients today. I have spent a career trying to figure out how I can get around a certain misstep within a portfolio and still have the firm earn its performance fee. Those tactics are still in practice at other firms, and I'm not going to name any of them, but that is not something that we do at Xponance. The clarity and the transparency of our mission and our tactical approach to delivering what we say that we're going to do is more than just a tagline. And I can certainly speak to what other firms have done with respect to not just culture, but the practices of managing money, which is why I think the industry gets a little bit of a bad rap. It's interesting. We do quite a bit of work with police forces, police retirement systems, and they are notorious for, you've got to come in and do this presentation because I need to look you in the eye. And I appreciate that.
Yep.
That's their training coming out. That is their training coming out.
Absolutely their training.
Yep.
Is it like with a metal table and a spotlight behind a glass?
Yes, there is. With a bunch of retired or even current police officers holding guns, drawing out what they know to be the truth in investing practices. And I think that is a practice that we can all learn from.
Lisa, it's Women's History Month. And if I didn't talk about that, you and I discussed this a lot. We've had some killer panels that feature all women. And I can't wait to the day where we don't say this panel is all women. We just know, and that's the expectation. I really want to hear about your fundamental advice for investment professionals seeking a more diverse work environment. And we need to talk about gender. And in addition to addressing gender, a lot of times people may think finance is not accessible. And the vision of finance might be a quarter zip. Jamie and I love our quarter zips, a Patagonia fleece, a certain type of shoe, and a location south of Tribeca. We don't believe that here at NYSIF. I know that's not what you believe, but let's talk about those that might be listening. They're thinking about getting into finance and thinking about what does it mean to be a woman in the finance industry?
I think that there are artificial roadblocks for women getting into this industry. I think that the reputation of the industry of being rough and tumble, full of alpha male silverback gorillas pounding their chest on a trading floor. Some of that is true. That is how I grew up. That doesn't mean it's not fun. That doesn't mean it's not rewarding. It doesn't mean it's not impactful. It doesn't mean it's not fulfilling. I think that the onus has to be on my generation, our generation, to dispel some of those rumors and to really talk about what it is that we do And what is that we don't do? Because the media can take a hold of the romantic and the explosive and the extreme examples and create that image that may or may not be true. I think that the lifestyle also may preclude certain women from pursuing the career in finance. But I think that we got to get them early. One of the things that I do is I teach a financial literacy class at a high school in Harlem between 8th and 10th grade that talks not just about career options within this broad swath of what finance looks like and feels like and the kind of stuff that we do every day, even presenting to a trustee panel full of police officers, but also speaking to the rewards of the industry and what it takes, and that we are made of grit and stamina and fortitude, and therefore perfectly suited to pursue this type of career. And those of us that are raising the Gen Zers, I guess, in life, that we have that responsibility to ensure that career paths are open and that the rumors have been dispelled and that the different career paths within the industry are open and accessible. So ensuring then our girls from a very young age know that this is part of who you can be. And we've got so many leaders and mentors at the top of the game right now. There's so many that we can look to and point to with respect to the impact that they've made on the industry. I think that's really important.
It is. I worry that I'm raising little lawyers at home. There's a lot of negotiating happening going on. And, here at NYSIF, I often refer to counsel's office as counsel's office when I'm happy with them, and legal perhaps when they're trying to rein us in a little bit. It is a great responsibility for us. Jamie and I both talk about parenthood a little bit. We do mention it. That's part of our identities and who we are.
Indeed.
And I have a boy and a girl, and I definitely think about those opportunities. But my fear, I love you, counsel's office, is that perhaps I am raising two little lawyers. There's a lot of negotiating. And perhaps I can steer them towards the finance industry. That might be helpful for us in the long haul. There is a great responsibility. Do you want to talk about that at home? You've talked about you've alluded to,
Absolutely.
You and I have talked a bit. Tell me about your daughter.
Absolutely. But I think that the industry needs good negotiators as well. So
Okay, they're 4 and 6.
Okay, but still,
Help me out.
this is what we have to model at home and at work.
Yes.
And the little gangster that I'm raising at home is a 21-year-old college senior who is finding her way now. And because she has been exposed to this industry almost all of her life, and she does travel with me on business or has in previous life forms to do the presentations and to do the client meetings and so forth, she's been exposed to this, pretty much, all of her life. I have been sort of a road warrior, and oftentimes making sure that she is safe and protected, even when I can't always be there. As a working mom, you can't always be present. And that is, it's something that I used to regret, not always being able to do bed, bath, brush prayers every night. But it's something that she can see as she is trying to find her way in the world as well. One of the things that we have done early, as you might imagine, for the occasion of her 18th birthday, she opened up her first brokerage account.
All right.
There we go.
And to the extent that she can, with mommy's limitations, she can trade that account. Of course, she has to do the stock pitch to me first with
Love it.
with the research.
Does she have a deck?
She does have a deck.
Love it. I love it.
She does have a deck of the stock picks that she has made, that she's well researched, and she does fundamentals and technical research. and we talk about those trades before I put them through. So I am her designated trader. She's the portfolio manager, and she will talk me into what it is that she needs to do. So she's had that account open again, and it doesn't take a lot of money. I recommend that every little girl, even your 4-year-old, start early, watching the markets, asking mommy about, well, what is this? What are these? What are the news flows and events of the day that are going to impact market movements? And she's made a nice little 200% return.
Wow.
200% return.
Well, over 4 years.
All right.
Because she's 22.
Still very impressive.
Indeed. But she, knows how to pound the table as well, and maybe bringing home some of those bad practices.
I love it.
I love it.
I want you to tell our listeners or other firms that are considering working with us coming off of our 16th annual MWBE Symposium, what advice would you give to them for interfacing here with NYSIF?
So one of the reasons why we are so grateful for the partnership with NYSIF at Xponance is that NYSIF is one of those places that calls you to greatness. They hold our feet to the fire, not just with respect to the competitive bidding process, where we have to be as competitive on deliverables, on pricing, on mandate, on all of the things that we're supposed to be doing on the front end, but also throughout the course of the relationship. So the reporting and the transparency and the integrity with which we bring our investment mandate to this team has got to be first rate. You acquire it, as you should. Part of the journey to NYSIF for us was ensuring that process was tight, that we had the right investment philosophy, that we had the people, team, and the technology to ensure that we can deliver for you as any of the other household names, which will remain nameless. NYSIF would never sacrifice their standards for anybody and the call to greatness.
Fundamental features guests who bring a different wealth of experience and expertise to the podcast.
We go further by exploring the fundamental principles that motivate each person to reveal who they are.
Now let's get to the heart of the matter, the fundamentals. Lisa, it's been a fun conversation, enlightening on many fronts. We may have a sense just through this conversation, but would love to hear directly from you one of those principles that drives and guides you.
I lost my mother about 6 months ago.
I'm sorry to hear that.
Eulogizing her was probably the single most difficult task in my life. But I knew that I was on assignment. And the guiding principle that I spoke of was, Mommy, I understand the assignment. Mm-hmm. And being first generation to go to college, first generation to have just one job, first generation to really be a professional. And I'm a native New Yorker. I was, born and raised in this city that I love. Proud product of the New York City public schools. My parents worked multiple jobs to ensure that my sister and I could have the life that she didn't have. So the guiding principle in and around that is, I understand the assignment. And that is to pay it forward. So it's not about me or my journey anymore. It's about the Gen Zers, the 4-year-olds and the 22-year-olds in life. And the 15-year-olds that are trying to figure it out. And again, being a working mom, I can't be the snowplow mom or the helicopter mom or the tiger, because we're not there all the time. And truthfully, I don't think that I want to clear a pathway away from, all the roadblocks and the stumbling blocks, because I didn't have that from my mother either.
Right.
But the assignment that I carry, the vision that I carry forward from her and from her grandmother as well. I come from a strong line of matriarchs that were plowing and sharecropping and doing things that we would never imagine today, but understanding that the journey is supposed to be tough. It's supposed to be rough ahead. And that's how we build our muscles. And that's what makes us stronger, and facing the challenges and obstacles every day, whatever they are. And again, the next generation has got different challenges than we did when we were coming up, but understanding that the muscles that they will build in their journey are what they will need for the journey ahead.
Thank you. Thank you for sharing that.
Thank you for sharing that about your mother. We were all on different stages with that too, and it really hits home.
It does.
And,
yes, it does.
it's incredible.
That's why we do what we do.
Yeah.
There's so much about this. This is our, our work, our insurance podcast. We're trying to make things very accessible. And so many of our guests, it's coming back to families. It's coming back to those dynamics.
Absolutely.
It's coming to the first places that teach you.
Coming back to people.
It's coming back to people.
Yeah.
It really is. I want to hear about mentorship. Who's been a mentor to you? How did they inform who you are and how you lead today?
Yeah. So mentorship is very important, and it can take so many different forms. I remember my first few years. Again, I was a black trader on the international equity trading desk for my first few years after graduate school. Not a lot of women there, but the few that would take me up and pull me into the ladies' room and say, this is what you're going to say, and this is how you're going to respond to that. And that trader just picked you off. And here's how we're going to make it right for our clients. Those are the things that I will never forget. And that is the way that I am seeking to pay it forward with the next generation. And there are so many other women friends in my head that are accessible, that are abstract as well. So, for example, I serve on several nonprofit boards as well, and that is, again, a privilege that I have as well. And I can hear Michelle Obama in my head saying, if they're going to give you a seat, don't waste it. Speak up. Make sure that you are carrying the vision forward, that your voice matters. So a seat at so many different tables is, again, part of the responsibility and the privilege. So understanding, again, the voice of so many, including my own mother, of carrying the vision forward, and making sure that I'm representing and making sure that the voice is relevant, prescient, timely, and that I'm not wasting any of the seats that I have the privilege of having.
Lisa, thank you so much for being here.
Thank you for having me.
This is Fundamental, the podcast from NYSIF.